Welcome everyone to Vested Interest. This is Shane. We are going to do a little bit of a different style of video today. It is almost 2023. We are quickly wrapping up 2022. Excuse me, I'm out in my garage recording, so forgive the mess behind me. Usually I have this blurred out, but like I said, we're going to do this a little bit different. So I have the whole screen here. Going to show the whole screen here today. And before we get in the video, I'd like to take a moment to thank everyone who has taken the time to watch, comment, and like the videos. And a special thank you to those who have subscribed. If you have not done so already, go ahead and subscribe down below. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. And this is Vested Interest. Here we focus on dividend growth stocks. I do dividend portfolio updates. I do a stock pick of the day series Monday through Thursday. And again, if you're interested in that sort of content, go ahead and hit that subscribe button and hit the notification bell down below. It is December 26th. I have the day off, so I am going to take a little bit more time, and we are going to walk through some stocks that are in my portfolio, a couple that are not, that I'm watching and waiting for a good buy opportunity. But I'm going to show you how I would look at these stocks overall, and we're going to look at three categories. We're going to look at high yield, low growth, so you can see them over here: high yield, low growth, mid yield, medium growth, and low yield, high growth, and some honorable mentions there at the end. So let's jump. First, we'll go over, this is a picture of my family from yesterday in our front room before the kids came down and tore everything up for Christmas. So happy holidays to everyone. Hope you had a very Merry Christmas yourselves. My two daughters, let me see here. That's Shyla there. That's Callie. That's my wife, Brianna. And let's jump right over to the stocks we're going to look at. Again, we'll focus on high yield, low growth. So we'll start off with Medical Properties Trust, right? Ticker MPW. And what I would do for this typically, so again, bear with me. We're going to go to MPW stock. Scroll down a little bit. I like to jump into Yahoo Finance. We'll jump right into Yahoo Finance. Again, Medical Properties Trust. This is a REIT out of the real estate sector, right? Typical information that we cover on our stock pick of the day. 52-week range as low as $9.90, as high as $24.13. So at 11.15, definitely close to that 52-week low, right? I like these guys anything under $11, so they are very close to a buy in my opinion. Some of the information I don't typically show on the channel, right? Yahoo Finance calls this, excuse me, my nose is itching. Yahoo Finance calls this undervalued. They estimate it 16% undervalued, right? Some information that I don't typically show. They show a bullish pattern. This is if you were more on the day trading side, right? Whether it's bullish, bearish, neutral. But we're going to jump into some of these others, again, that I don't typically show. Statistics is a good one. Let's just run through real quick how I would typically do it. Market cap, $6.668 billion. Beta of 0.87, so less volatile than the overall market, even though the last trading day you could see that volatility throughout the day. Excuse me. PE ratio on this one is low, but PE is not what you want to look for on REITs and real estate. You want to look for, oh God, I can't think of it off the top of my head, but we'll get back to that. Earnings per share is 2.09, right? So that's nice. Their earnings date is coming up. Funds from operations, that's what I was trying to get to. PE ratio is not a good one for REITs. You want to look for funds from operations. Earnings per share is $2.09. Earnings date, the next one is between February 1st and February 6th. And their forward dividend is very nice, $1.16 paid out on the year, but a 10.40% yield. Very high yield on these. That's why we're focusing on high yield, low growth for this one here and the next few. Ex-dividend date was December 7th, so you've just missed that one. And their one-year target, at least according to Yahoo Finance, is $15.46. Now let's get into some other, the statistics here. I would go into this page here. Some of the things I would look at, right? Price to sales, 425. Price to book, this is a very good one. PEG ratio would be another one I'd look at, but theirs is not applicable here. 425 price to sales. Price to book, anything under 1 tells me that they are undervalued. This one at 0.75 would tell me they are currently undervalued. Excuse me. I don't know why my nose is itching today. Then you can look at right over the last 52 weeks, they are down 51.33%, right? So S&P change is 19. So they are down more than the overall market. You can see that here. Again, you can see that 52-week low, 52-week high. Return on assets is another one I like to look at. Return on equity, 3% return on assets and a high return on equity, 14.55%. This is basically the reinvestment of their capital, management effectiveness. Profitability, they have a 77.51% profit margin and their operating margin is 58.91, very high there. Some other ones I like to look at, you can look at their revenue. I would go and I'll show you that in a minute where I would go to look at their revenue, though you want to see if it's growing over time. So I wouldn't really look here for that. But another one that I like to look at here is their 5-year dividend average, right? Their 5-year dividend average is 6.02. So according to the dividend yield theory, right, you look at their 5-year average or 10-year average, 20-year average, whatever it is, and you compare it to their current dividend yield. If it's higher, which it currently is, forward annual dividend yield is 10.4%. We saw that on the previous page. Since it is a lot higher, that shows you or will give you a good indication that this particular stock is undervalued. Their average is 6.2. They're currently at 10.4%. So in my mind, they're very undervalued. Another one I like to look at, payout ratio, 55%. For REITs, you have to actually pay out 100%. So they are a little lower than where they need to be. And then their ex-dividend date would be January 12th, or ex-dividend date was December 7th, and their payout will be right January 12th. So that would be what I would look at in the statistics section. I like to look at the PEG ratio, anything around or under 1, price to book, anything around or under 1, right? And then obviously, like I said, profitability, management effectiveness, and then 5-year average dividend yield compared to current dividend yield, right? Is it higher or is it lower? If it's lower, that tends to lean towards overvalued. If it's higher, then that tends to lead to undervalued, as well as payout ratio, right? Those are the things I'm looking up here. Now, to look at revenue, I would actually go into financials, right? Click on the financials tab. Income statement, balance sheet, and cash flow are some of the areas you can see that. You can see right at the top, total revenue. So we'd look at 2018, 784,522, 2019, 854, 1.2 million, 2021, 1.5, and at least to date, 1.5. So you can clearly see that their revenue is growing over time. That's what you want to see. You want to see revenue continually growing. Another one, and you can look at a lot of different things in this particular one. Another one I like to look at, does it show total expenses? Diluted shares, right? Are they issuing more shares, right? So it looks like they may be issuing some shares over time. Basic average shares. So they are issuing some shares. REITs typically are. But again, I'm more focused on is the revenue growing? And then the other one I want to see, I'll go to cash flow and look at their free cash flow, and I want to see growing free cash flow. So again, from 2018, 449 to current to date, 792, 449, 494, 617, 811, right? 2018, 2019 up to 494, 2020, 617. Because here, their free cash flow, this is what their dividend is going to be paid out of. So you want to make sure that their free cash flow is growing, right? They're repaying debt, right? They are issuing a little bit of stock. Okay, so that's some information there that you can look up and how I would look at just a quick rundown of the company. Obviously, I would want to look up Medical Properties Trust, read more about them. Let's do that real quick. We're not going to do this with every stock. We're just going to do this with a few throughout each one. Maybe we'll pull 2 or 3 out of each sector here or section and look at them. So Medical Properties Trust, probably what I'm with. Medical Properties Trust. And then you could go over to their, this is another thing I would do. I would go over to their homepage, right? So what are they? What does Medical Properties Trust do? Let's look at the company, right? The global source for hospital capital, okay? So that's what they do. They invest, they're a REIT that invests in hospital care. We understand healthcare, we know hospital needs, and we have the capital resources that can help MPT as a financial partner that offers more resources, more capability, and more ways for operators and investors to seize financial opportunities. Second largest non-governmental owner of hospitals in the world. That's who they are, right? Here's their portfolio mix, experience in unlocking the value of hospital and real estate growth. So again, they're a real estate investor in hospitals. So you could go through, what do they have? Here's their leadership if you wanted to know who their board is. Timeline of, since inception, had a strong vision and great success. The company understands healthcare. What have they done? 2003, that's when they were founded by Ed Aldich, co-founder Emmett McLean, and Steve Hammer. So again, you could go through this and see what all they have done over the years, right? And if you were interested in a career with them, go ahead and look that up, departments. So you could really dig deep into this company, figure out what they're doing, what they've done over time, where they're headed, if you wanted to do that. Okay, so that's Medical Properties Trust. Let's close those down real quick. We'll leave one site open. We'll do one more here. So stockanalysis.com is another place I like to look at, right? So we're still on Medical Properties Trust. We go up here to company stock, MPW, Medical Properties Trust, click on that. So same thing, you could go in here to their statistics, see a lot of the same information that we saw on Yahoo Finance. This one is one I like to look at for dividends, right? Here I find out their dividend growth, 3.57 dividend growth. So again, very nice yield, high yield, not a lot of growth, but that is why we're looking at them in the high yield, low growth section. Still 55% payout ratio, gives you the same information, right? This one you can kind of see their growth over time. Let's go back a little bit. 2018, they were paying 25 cents. 2019, 26 cents. 2020, 27, 21, 28, 22, 29. So I would estimate based on this growth, probably in 2023, they're going to be paying about 30 cents per share, right? They'll probably keep right close to that 3.57% growth. All right. So again, let's close out of these. Probably should have left stockanalysis.com open, but we'll get back to it. So let's go back to here. So that was Medical Properties Trust that we were looking at, ticker MPW, right? Let's look at another one. Let's look at Omega Healthcare Investors is real similar to Medical Properties Trust. They're another REIT in the real estate sector that invests in medical properties, right? More on the elderly care for OHI, but another high yielder, right? Low growth. But let's look at Verizon. It's in another sector. This is out of the communication sector. So let's sink this down, go back into, and we will go VZ, right? VZ stock, VZ, Verizon. And we'll scroll down and we'll go back into Yahoo Finance. Again, a lot of the same information, 52-week range, $34.55 for a low, high of 55.21. They have it undervalued currently about 7%. They say it's bullish, so it might go up from here. All right, market cap of 161, beta of 0.36, so less volatile than the overall market. Extremely low PE of 8.35. I do like that. Earnings per share is $4.60. Next earnings date is January 24th. Forward dividend is $2.61 paid out on the year. They are a quarterly payer. We'll see that in a minute. Another one with a very nice dividend yield, 6.8%. Not as high as what we saw there, but still very nice. Ex-dividend date, January 9th. And Yahoo targets estimated one-year target is $45.25. Let's jump over back to stockanalysis.com. VZ, right? Verizon Communications. Go back here. Go to the dividends. Again, 6.7 dividend yield, 55% payout ratio. Dividend growth only 1.98%. So low growth, higher dividend yield, lower growth, but same thing. You can kind of look here and see 60.25, 61.5, 62, right? 64, 65.25. Another one that I typically show on my stock pick of the day would be forecast. What do they say? We saw Yahoo Finance forecast. What do they say it? And then I think I've said this before, but 39 stock analysts have taken a look at this. And when you click on this now, when you're actually in the web page yourself, you can see 3 people out of the 39 say it's a sell. 22 say it's a hold. 8 call it a buy. 5 call it a strong buy. 1 calls it a strong sell. They have their low estimate of $31.31, which it's very close to that now, $38.41. They have an average 46.16 and a high of 67.20, and that's the estimate for, range of these 39 stock analysts here, right? So that's another one that I like to look at there. Let's go back into Yahoo Finance, do the same thing with statistics. Let's go to statistics, right? We like to look at price to book, 1.8, not terrible. Price to sales, 1.19. PEG ratio of 5.73, right? Trailing PE is 8.35. Forward PE 7.68. So they see the PE going down actually. Profit margin to 14.22. Operating margin to 19.73. Return on assets is 4.59. Return on equity 23.66. That's pretty nice. We can see revenue over in financials if we want. But let's go down here and look at 5-year average dividend yield, 4.6. Current dividend at 6.8. So that tells me they are undervalued with the dividend yield above the 5-year average, they are undervalued. If it was below the 4.6, they would be overvalued. Payout ratio 55.98, right? Ex-dividend. So a lot of the same information you can find in multiple places, but let's go over to financials. And I'm sorry I'm going through this pretty quick, but hopefully you're getting the idea. You can stop this, replay this anywhere you need to. Again, we want to look at revenue. Is revenue growing? 130, 131, 128. Had a bad year in 2020, but back up to 133, 135. So overall, from 2018 to current, the revenue is growing, though it is slow growth, right? So they have growth, but not a lot of growth. That's probably why their dividend is not growing very fast. And then cash flow, which the dividends are paid out of, we want to see if that's growing. 16.252, 16.9, 21.4. 2021 negative 28.3. So we would want to look at this. What are they doing here? Are they paying down debt significantly? Right? Looks like they're paying down debt pretty straightforward. Did they buy back a bunch of stocks? What exactly happened here? You'd want to dig deeper and figure it out. To date, 10.8. So free cash flow is down a little bit. Might be something to keep an eye on, right? These type of businesses and communications, Verizon, specifically others, like AT&T, they've been around a long time. They have a lot of internal costs, right, for these businesses. So you may have some build out of infrastructure or something like that. You'd want to get into the books of Verizon. So let's drop down, and we'll do one more out of the high yield, low growth sector. Let's do Enterprise Product Partners, ticker EPD. So let's go back over here. EPD stock right there, Bing search. Let's scroll down. All right, Enterprise Product Partners, ticker EPD. This is out of the energy sector, right? Currently $23.95, 52-week range, $21.32 for the low, $28.65 for the high, so closer to that 52-week low. Market cap of 52.105 billion, beta of 1.08, so more volatile than the overall market. Earnings per share, PE ratio of 10.37, low PE. Earnings per share of $2.31 per share. Next earnings date, January 30th through February 3rd. Forward dividend is $1.90 paid out in the year. Another high yielder, 7.93%. 1-year target estimate of 31.48. Let's jump over to their statistics. Price to book 1.95, price to sales 0.93, right? No PEG ratio. Looks like they had one there for a while. Must be in the negative then. Forward PE 9.13, trailing PE 10 points. So their forward PE is lower than their trailing PE. That's in the past. That's looking forward. Profit margin 9.12, operating margin 11.14, return on assets 5.73, return on equity 19.53. Very nice numbers here. Let's look at their 5-year average, 5-year dividend average, 7.5. Currently, forward annual 7.93. So higher than their 5-year average, not by a lot, but still higher. So it looks like another one that is undervalued, or at least potentially undervalued by dividend yield theory. And payout ratio 80.35, right? Little on the high side. I typically like 75 and under, but again, with this growing slowly, I'm not as concerned with this. If they were growing, 10, 20%, and I was counting on 10, 20% growth going into the future, I would be concerned, because this 80% now, that just means they have about 20% they can pay out and continue to raise out of. All right, so let's go and look at their financials. Let's go over to financials. Total revenue 36, 32 down 27, back to 40, back to 55. So overall, from 36 to 55, they are growing over time. Looks like a little bit sporadic. Again, you'd want to look at each year and see what's going on here. Why were they down these 2 years and then back up here again? What is the issue here? Did they sell a portion of the business, right? What's going on here? And then let's look at cash flow, because free cash flow is what pays the dividends. 1.93, 1.98, 2.6, 6.2, 5.8. So overall, 1.9 to 5.8. Their free cash flow is growing over time. That's what we want to see. This is to date, right? So they may have another quarter in here. I'm not sure what their quarter is. I'd have to look at that. And then again, if you wanted to go to EPD here, type in EPD, stockanalysis.com. Go to dividends, 80% payout ratio. EPD is growing 4.4%, right? Another one you could go back in time and look. So in 2017, 41 cents. 2008, 42. Looks like they actually went up to 43 in 2018. 2019, 43.5. 2019, 44. 45 and 20. Did they have a 4444? So not much growth there in 2020. 21, 45, 22, 46, 47.5. So 4.44% growth, quarterly payer. So again, shows you where I get this information from, how I'm looking at a stock. All right, low estimate, at least no strong sells, no sells, 5 holds, 14 buys, 7 strong buys, 26 stock analysts that have taken a look at this. Low estimate of 28.28, currently lower than their lowest estimate. Average $32.11. High estimate at $37.80. All right. So those are all out of the high yield, low growth sector. Let's jump over to mid yield, medium growth, right? We'll do the first 3, Intel, Ally, and HP. All of them in my portfolio. CVS is not. Cisco is as well. Let's go back real quick. High yield, low growth. All of these are in my portfolio. Medical Properties Trust, Omega Healthcare Investors, Verizon, Enterprise Product Partners. All 4 of these in my, actually another one in that sector that or not sector, but in this particular area here that I would call high yield, low growth would be Enbridge, right? That would be another one similar to Enterprise Product Partners, but they're out of Canada. So thered be some Canadian taxes, that's why part of the reason I didn't put it here. But anyways, let's go down to mid-yield, medium growth, ticker INTC, right? Ticker INTC. This is for Intel Corporation. Let's do the same thing here. And we will go back to INTC. INTC is the, INTC stock. All right, Intel Corp. Let's go down to Yahoo Finance. Same thing. They call it estimated near fair value, 5% estimated return. So they're 5% undervalued. Is what they're saying here, right? Currently sitting at $26.09. 52-week range, $24.59. As high as $56.28. Market cap of $107.673 billion. Beta of 0.74, so less volatile than the overall market, even though it looks like a lot of volatility during the last trading day, right? PE ratio extremely low, 8.08. Another one with a low PE ratio. You'll probably see a lot of these have low PE ratios. Earnings per share, $3.23. Earnings date, next one is January 24th through the 30th, somewhere in between there. $1.46 for dividend. That's paid out on the year. They are a quarterly payer. And this one, even though it is mid dividend, it still is relatively high, 5.60, because it has pulled back towards that 52-week low, right? So I wouldn't typically categorize this as high yield, but right now it kind of falls in that category. And let me look at my notes. Whenever I call high yield, I'm looking at anything above 5.5%. So this is right just above high yield, I guess. Mid yield, I'd call 2.5 to 5.5, and low yield, I would call 2.5 or lower. Right. Sorry, I'm looking at my notes over here. Ex-dividend date, the last one was November 4th. 1 year target, $31.13, at least according to Yahoo Finance. They have a bearish pattern. So this one, again, might see it pull back more. If they say bearish, that means it's coming down. Bullish means it's going up. Neutral means it's just going to float sideways for a while. Let's look at statistics. Again, sorry if I'm going too fast. Just wanted to try to get as much information as I can here. I am hanging out with my kids today, but I wanted to take a little bit of time to put a video together on my day off. So trailing PE, 8.3, forward PE 14.27. They see it going up. PEG ratio 12.04. Price to sales 1.5. Price to book 1.11. Very close to that 1 or below. That would be undervalued in my mind. Profit margin, 19.13, very nice profit margin. Operating margin, 11.54. Return on assets, 2.93. Return on equity, 14%, right? Anything above 10% for return on equity is very nice. And then we would go down and look at 5-year average dividend yield, 2.6. Their current forward annual dividend yield is 5.6. So this is another one that, according to the dividend yield theory, high above much, right? 2.6, almost twice above what its 5-year average is, so it speaks to some undervaluation. Payout ratio is 44.66, right? There's your ex-dividend date and next payout dividend date. Let's look at their financials real quick. Is their revenue growing over time, right? 70, 71, 77, 79, 69 to date. So it looks like their revenue is growing, not extremely fast, but it is growing over time. Let's look at their cash flow. 14.2, 16.9, 20.9, 9.6, and negative 13.33. So this, for Intel, is a bit concerning. If you didn't know anything about the company, you would want to look at them significantly here. Part of this negative is they are building a large factory in Ohio. So a lot of their free cash flow went to that, right? So this one might be a little concerning. You want to watch this and make sure that they are not getting too ahead of themselves, because their free cash flow is negative, but they did do a significant investment in new factories, specifically in Ohio, right? So then if we wanted to look a little further, let's do INTC here in stockanalysis.com, Intel Corporation. Let's go to the dividends. Payout ratio 44.2, right? Dividend growth 5%. So not extremely high dividend growth, but is growing, right? This is why I call it a mid-dividend yield, even though it really is a higher dividend yield than typical. Its growth is not extremely fast, but same thing. You could roll through here, see 30 cents in 2018, 31.5 cents, or 31 and a fraction of a cent there in 2019, 33 in 2020, 21, 34, 22, 36. So dividends growing over time. Then you could look at their forecast, at least according to stockanalysis.com. 50 stock analysts have taken a look at this. 6 call it a strong sell, 9 call it a sell, 28 call it a hold, 6 call it a buy, 1 calls it a strong buy. Low estimate of $18.80, 30% decline potentially. Average of 31.75, that would be a 21% increase, and a high of 75.6 estimate there, right? So that's Intel. Let's jump over. We'll do Ally Financial as well. Ally Financial. All right, so it was ALLY was the ticker. ALLY. This is out of the financial sector. Intel was out of the information technology sector. Ally will be out of the financial sector. Let's go to Yahoo Finance here. Boom. We're going to close out of some of these. Close that. We'll leave that open. We'll close that. So Ally Financial, right? Here's a 22 undervalued, 22% estimated return. So they think it's undervalued, right? 52-week range, $22.34 for the low, high of 53.83. So at 23.93, definitely closer to that 52-week low. Market cap of 7.147 billion, beta of 1.24, so more volatile than the overall market. PE ratio extremely low, 3.99, but for banks, you want to look at price to book, right? So we'll get into statistics here in a minute and look at their price to book, and we want to look at something around 1 or below 1 for banks. Earnings per share is $6 per share. Earnings date, their next one is January 20th. Forward dividend, $1.20. They do pay out quarterly, so divide by 4. Dividend yield of 5.01%. Ex-dividend date, the last one was October 31st, and their one-year target, at least according to Yahoo Finance, is $32.40. They have a bearish pattern detected, right? So they think it's going to come down. Looks like it came down a little bit in the after hours last trading day. Let's look at their statistics, right? Again, for banks, PE is not really huge or relevant. PEG ratio 0.3, very low PEG ratio. Price to sales 0.85. Price to book 0.69. Like I said, for banks, anything under 1 is undervalued. Price to book, or typically undervalued. Profit margin 25.53. Operating margin 24.32. 52-week range, they're down 49%. Average market is down 19.75. Return on assets 1.14. Return on equity 14.10. I think everything we've seen with a return on equity right now has been over 10. So that's nice to see. 5-year average dividend, again, according to dividend yield theory, their 5-year average is 2.41. Their dividend yield is currently almost double that, 5.01. So they are undervalued, right? About by 50, almost 50%, according to the dividend yield theory. Payout ratio extremely low at 19.17, right? Dividend date was their last one. Ex-dividend date was October 30th, paid out on November 15th. Let's look at their free cash flow. So let's go back into financials. Revenue first, total revenue 6.7, 7.3, 7.4, 8.7, 9.1. Continually growing revenue there. Let's go to, and again, you can look at, here, let's look at balance sheet real quick. What else can we get out of the balance sheet? Total assets, 178, 180, 182. What you're looking for here is assets over liabilities, right? You want 178 over 165, 180 over 166. If their liabilities were over their assets, that'd be a negative. You don't want that. You can look at their ordinary shares, right? 404, 374, 374, 337. Their shares are going down, right? So their shares are decreasing. That's good to see. So that's a good one to look at. Cash flow is another one. We've looked at that on all of them. 441,000, 27,000, negative 581, negative 107, and then up to 2.3 million. So their cash flow shot way up. So you'd want to see and understand what happened in 2020, what happened in 2021, right? Might have had something to do with the virus that was running around, but you'd want to look at their books, go in and look at Ally a little bit better, understand what they are. But from 2018 to 2000 and current, anyway, 2022, growing free cash flow. Plenty of free cash flow to cover their dividend payout right now. Now let's go over and look at them. Ally, ALLY is the ticker. Type it in here at the top. No. Ally dividends. 19.2% payout, very low payout, 5.01 dividend yield we saw. Dividend growth 36.36. So that is what we're looking at. Very high dividend growth here, right? Even though it's under the moderate growth, this is actually pretty high dividend growth. But it does have what I call a mid yield, right? So this one isn't actually a little bit higher than what I would call mid growth. 2020, 19 cents. 2021. Looks like they started, and I think banks were frozen for a while, right? They grew from 2019 and then kind of froze from 20 through 21. Banks were not allowed to, because of the financial crash in 2000, there were some rules that were put in place that they were not allowed to grow dividends for a while. So that's probably why you saw that little freeze there, almost a year, 1, 2, 3, 4, 5 quarters, they froze it. But now they're growing again, 25, 30 at 36.36. Then we could look at their forecast again. What are the analysts? 26 stock analysts that have looked at this. None call it a strong sell. 2 call it a sell. 8 call it a hold. 9 call it a buy. 7 call it a strong buy out of the 26 stock analysts that have taken a look at this. Right? They have a low of 19.19, so they potentially see further pullback. Average of $33.04 and the high of 48.30. So hopefully you're getting an idea of how I do my research on these stocks. Again, I would go in and look at Ally Bank and see how long they've been around. And let's look at one more in this sector here. Mid-yield, medium growth. I actually think HP is growing pretty fast too, but it's in the mid-yield, mid-growth category. But let's look at it. HP Inc., HPQ. So let's go back over here. Right, we'll go to Yahoo Finance. We'll plug in HPQ. Right there, that should pull it right up. Yep, there it is, HPQ. Last trading day, $26.76. 52-week range as low as 24.08, as high as 41.47. So definitely closer to that 52-week low. They have it near fair value. They actually think it's a little overvalued right now. So you'd get a negative 3% estimated return right now. Market cap of $26.282 billion. Beta of 1.02. So more volatile, just slightly more volatile than the overall market. Again, PE ratio of 8.77, very low PE ratio. Earnings per share, and this is out of the information technology sector, so we do want to look at PE ratio for this one. Earnings per share is $3.05. Earnings date is February 27th through March 3rd, somewhere in there. Forward dividend is $1.05. Divide by 4 because it is a quarterly payer, 3.92%. Dividend yield, ex-dividend date was December 13th, so we passed that. They do not have a 1-year target estimate, and they have a neutral commodity. So they think this might float sideways for a while. Excuse me. All right, but let's look at the statistics here as well. Statistics here. Forward trailing PE is 8.7, forward PE 7.98. They think it's going to be a little lower PE going forward. PEG ratio of 8.51, price to sales 0.45, no price to book. That's odd, a little bit. Profit margin of 5.09, operating margin of 8.32, return on equity. Now that's probably why they have no price to book, right? They don't list out their return on equity. I wonder if that's because they haven't released their final numbers for the year. They are down 29% on the year. The S&P is down 19%, so down more than the S&P. Here's where we look at the dividend yield theory again. 5-year dividend average, 2.91. Forward annual dividend is 3.92. So again, their current dividend yield, 3.92, is higher than their 5-year average. So speaks to some undervaluation. This one here is one, according to the dividend yield theory, is also undervalued. Payout ratio, 32.79%. Right? Let's look at their financials. And we'll just look at total revenue, 58 in 2019, 2020 was 56, 2021 was 63, 2022 62, current to date 62.93. So at least from 2019 to current 62, there is some revenue growth. Let's look at free cash flow. All right. Free cash flow, 3.93, 3.73, 5.8, 3.6, 3.6. So 3.9 to 3.6. Actually, free cash flow looks pretty flat, actually. Shot up in 2021, 3.6 currently. We'd have to look and see what their estimated issuance of debt. Looks like they are issuing some debt. Repayment of debt, they are paying it off. Repurchase of capital stock. They are buying back stock, though. Let's look at their balance sheet, see what that looks like. Debt, $600,000. They got a lot of debt, actually. Total debt, 5.7. Tangible books, shares issued, 1.4. Not issuing a lot of shares. All right, well, let's jump over to, and we're looking at HPQ. So let's look at HPQ here in stockanalysis.com, HPQ. So they've had 25 oops, let's go to dividends first, right? 32.4% payout, 21.78%. Very nice dividend growth, low payout, nice dividend yield, mid-yielder, right? 19 cents in 2021, 2022 up to 25 cents. So that's where you're getting that. Let's go back a little bit further. 2017 was 13, 2018 13, up to 16 in 2018, 2019 up to 17, 2020 19, 2021 25 cents, 2022 26 cents. So nicely growing. Let's look at their forecast for HPQ. Out of the 25 stock analysts that have taken a look at this, they call it a hold. They have 1 strong sell, 8 sells, 14 holds, 1 buy, 1 strong buy. Low estimate of $24.24, 9.42% decrease. Average estimate of $29.9 and a high of $38.85. So that is HP Inc. We did 3 out of this sector here. So that's mid-yielders, medium growth. You've also got CVS Health Systems here, Cisco Systems. You know, CVS is ticker CVS, Cisco Systems, ticker CSCO. Again, all these are in my portfolio. I will be adding these throughout the year whenever they present value. Last category we're going to look at, well, we'll look at one more. We'll do honorable mentions as well. We probably won't dig deep into any of those, or at least a surface level that we've been doing, but we'll cover a few out of this section here. These are what I would call low yield, high growth, right? So we've got Bank of America, ticker BAC. Let's take a look at it just like we did for the others. So let's go back to Yahoo Finance, type in BAC. There it is, Bank of America. This is out of the financial sector. Right, 52-week range as low as $29.31, as high as $50.11. Currently sitting at $32.47, so closer to that 52-week low. Market cap of $260.488 billion. Right, they call it near fair value. Looks like it might be actually, according to them, a little overvalued. Excuse me. A beta of 1.39, so more volatile than the overall market. PE ratio of 10.2, but again, we want to look at price to book for banks. Earnings per share, $3.16 per share. Earnings date, January 13th, so their next one is coming up next month in 2023. Forward dividend is 88 cents. They are a quarterly payer, so divide by 4. And their dividend yield, 2.71. Ex-dividend date. So they are, realistically, I say 2.5 is a low yielder, but I mean 2.7 is close enough. This is, in my opinion, a low yielder. They are only this high because they've pulled back recently. Ex-dividend date was December 1st. One-year target, $40.99. So Yahoo Finance believes that they have some potential upside, and they see a bullish pattern. So this one may go up in value here over the short term. Let's jump to statistics. And again, for banks, we want to look at price to book. Anything around or lower than 1 is fair or below value. Under 1's 1.09 currently, right? So in my mind, they're fairly valued. Profit margin of 29.95, high profit margin, operating margin 33.75, return on assets 0.89, return on equity just over 10. We want to see, like I said, anything over 10 in my mind is good for return on equity. 52-week change, this is another one. They are down 27.26. The overall stock market, S&P 500 anyway, is down 19. So another one down more than the overall stock market. So you're probably starting to see some themes, right? A lot of these are down more than the overall market, right? So that actually tells me it might be a time to look at them. Plus, they are close to their 52-week lows. And looking at the dividend yield theory again, 2.08 is their average 5-year dividend yield. They're currently sitting at 2.71. So another one that is currently above their 5-year average, so speaks to some undervaluation, at least according to dividend yield theory. Very low payout ratio, 26.90, so a lot of room to increase that dividend. Let's look at their revenue. We'll go over to financials. 91.2, 91.2, 85, 89, 92.4. So pretty flat, actually, as far as growth goes, right? Let's look at free cash flow. 39.5, 61.7, 37.9, down 7, negative 7, and currently 7.3. So this one we would actually want to look at. All right, are they starting a new year? Did they already flip over their they start in November or something? Is that why this is down so much? Because this is to date, right? And then let's look at them on stockanalysis.com. That might tell us a little bit more as far as their payout ratio goes, although we did see that. Let's look at that real quick. I think I missed that whenever I looked at statistics, or did I catch that? Their payout ratio, I thought was low. Yep, 26.9. So let's see if that matches what stockanalysis.com is saying as far as payout ratio. Bank of America, right? Dividends. Let's look at their dividends. Yep, 26.7% payout ratio. Okay. Dividend growth, 10.26. So we'll look back in time. 2017, 0.07, so 7 cents. 2017 went up to 12 cents. 2018 went up to 15 cents. 2019, 15, 18 cents. In 2019, 2020, 18. So there's that time frame again. We see 2019 to 2021, 2020 to 2021 that banks had to freeze there, right? There's that freeze in the dividend. And then again, they started growing in 2021, 18 cents to 21 cents, 21 to 22 cents currently. Now let's look at the forecast. 31 stock analysts that have taken a look at this, at least according to stockanalysis.com, right? We're over at stockanalysis.com. No strong sells, no sells, 11 holds, 17 buys, 3 strong buys, low estimate of $32.32, real close to that now. Average estimate of $41.81, high of $54.60. Right? Let's look at a couple more from that particular sector there, or section. Low yield, high growth. So that was Bank of America. Union Pacific Corp. So let's look at ticker UMP. All right, we're going to go back to Yahoo Finance. We'll start there. And it was the ticker UMP. Right there it is, Union Pacific Corp. Make sure you get the right stock. Union Pacific Corp, ticker UMP. They call it a little overvalued, at least according to Yahoo Finance. They have a 52-week range as low as $183.07, as high as $278. So closer to the 52-week range, but I actually look to buy this anytime it's under 200. My cost basis, and I'll show you that in a minute. my cost basis for a lot of these. And you'll be able to, again, never a recommendation to buy, hold, or sell a stock. I'm just giving you information on stocks in my portfolio and what I would do with them. These are ones I'm looking to add whenever the price is right over the next year. Add to my current position anyway. Market cap of 129.053 billion, beta of 1.12, so this is more volatile than the overall market. PE ratio, this is one of the higher PE ratios we've seen, 18.74. Part of the reason I'd like to see it pull back a little bit more. Earnings per share of $11, high earnings per share, $11.20. Next earnings date, January 24th. Forward dividend, $5.20. They are quarterly payer, divided by 4. Dividend yield, 2.48. So again, under that 2.5, low yield, but we'll see it does have high growth. They say it's a bullish pattern here. December 16th was their ex-dividend date. Just missed that. 1-year target, at least according to Yahoo Finance, $219. Let's look at their statistics. Union Pacific is out of the industrial sector, by the way. They are a railroad. So forward or trailing PE 18.7, looks like forward a little lower at 17.3. PEG ratio of 2.03. Price to sales 5.42. Price to book at 10.99. Profit margin 28.95. Very nice. Operating margin 41%. Return on assets 9.80. Their return on equity extremely high, 55.11. The management is doing very well. Part of that reason they are buying back stock. You'll see that here in a minute. 52-week change, 15 down. They are down on the year, 15.34. Overall market is 19, so they are down less than the overall market. This is one of the ones that is down less. Again, we're going to look at this to check out the dividend yield theory. 5-year average dividend 2.01, current forward dividend 2.48. So they are more or have a higher dividend yield, so that would speak to undervaluation. Again, if the yield is higher than its 5-year average, that's undervalued. If it's lower than its 5-year average, that would be undervalued. Payout ratio 44.29, right? Let's go over to their financials. Revenue 2018, 22.8, 2019, 21.7. Looks like they had a little bit of a shock in 2020, down 19.5. 2021 back to the 21.8. To date, 24.4. So pretty flat, slightly growing, I'd say. Right? Basic average shares. This is what I was saying. They are buying back. Right? If you wanted to see if they were buying back or diluting shares, 750. 703, 677, right now 653, at least in 2021. So if that's going down, it means they're buying back shares. If it was going up, it means they're diluting shares. All right, now let's look at free cash flow. 5.2, 5.1, 5.6, 6, currently at 5.9. So from 2018 to date, growing free cash flow, not growing a ton, but part of that is they're buying back shares as well. Let's look over to UNP on stockanalysis.com. UNP is the ticker, Union Pacific, right? So we're still looking at that. We'll look at their dividends first, right? 2.42 dividend yield, same as we saw there. Quarterly payer, 44.28 payout ratio, so low, 18% growth, right? Low yield, high growth. All right, going back to 2018, 80 cents. 2019, 97 cents. 2020, looks like they actually had a little bit of a lull there. 2021, $1.07. 2022, $2021, $7 to $1.18. 2022, $1.18 to $1.30. So 18% payout growth. Let's look at their forecast. 35 stock analysts have taken a look at this. No strong sells, 1 sell, 15 holds, 12 buys, 7 strong buys, low estimate of $178.77. I would love it back here. I'd really load up the boat here. Down 14.83 from where it currently sits. Average of 223, that would be a 6.42% increase, and a high estimate of $262.50, which would be a 25.05% estimate. Let's look at one more from the low yield, high growth. Owens Corning. We'll look at Owens Corning. This is a recent addition to my portfolio here. Ticker OC. right? So let's look at that one. Let's start with Yahoo Finance, ticker OC, Owens Corning. Click on it. Should pull them up, right? Owens Corning closed out the day, or the last trading day, $88.23. 52-week range as low as $72.97. I'd love them back here as high as 101. Not right at their 52-week low, but close to it. They call them undervalued. Yahoo Finance, 27% estimated return, so significantly undervalued in their mind. Market cap of $8.336 billion. Right? They have a bearish pattern, so maybe that means it's going to pull back to that $72 low. Again, I'd love it there. I'll just keep adding. Beta of 1.43, so more volatile than the overall market. PE ratio extremely low, 6.51. Earnings per share, 13.56. Owens Corning is another one out of the industrial sector. I think they're going to be hit hard as the construction pullback. Right? Anytime we have trouble in the market, the overall building market like we are right now, less building currently, you'll see companies like this, right? They provide insulation, roofing material, that sort of thing. So if the construction industry pulls back, this is one that would be hit hard. 1 year target estimate, at least according to Yahoo Finance, $147. Let's check out the statistics. PEG ratio 0.82, anything under 1 is typically undervalued. You'd want to look at the sector too, right? Compare this to the sector, but for just general purposes, 0.82 is undervalued or speaks to potential undervaluation, right? Trailing PE was 6.5, forward PE is 8.25. They see the PE going up a little bit compared to where it was. Again, price to sales 0.91, price to book 1.78. Profit margin 13.99, that's nice. Operating margin 18.2. Return on assets 10.59, return on equity 30.15. Very nice return on equity there. They are down on the 52-week, only down 1.66% on the last year. Out of the last 52 weeks, the overall market down 19.75. So down less than the overall market. Again, we're going to look at dividend yield theory. Their 5-year average dividend is 1.41. Their current dividend is 2.36. So speaks to some potential undervaluation based on dividend yield theory. Payout ratio is extremely low at 9.66%. I think that's the lowest payout ratio we've seen. Ex-dividend date, their next one is January 3rd. Looks like their payout date will be January 19th. Let's look at their financials. We'll look at revenue. Is it growing? 7.057, 7.1, 7.055, 8.4, currently 9.6. So from 2018 to current, 9.6, definitely growing, right? Average shares, 110, 109, 108, 103. Shares are going down. Cash flow, what's that look like? Free cash flow, 266, 590, 828, 1.01 million, 87,941. So from 266,000 to 941 currently, definitely growing free cash flow. Let's look at them according to stockanalysis.com. Ticker, let's check them out. Ticker OC. All right, 27 stock analysts have taken a look at this. We're going to look at stock analysts, then we'll go over to dividends, right? No strong sells, 1 sell, 12 holds, 8 buys, 6 strong buys, according to the 27 stock analysts. That's how those 27 break out. They have a low estimate of $70.07. That's pretty close to what we saw Yahoo Finance saying that they may pull back to. So maybe you want to throw on the watch list. I'll keep buying this. If it goes down, you know, anything under, in my mind, anything under 90 for Owens and Corning, I'm gonna be a buyer of. You know, and I'll buy it down to 70, and I'll buy it back to 90. I'm fine with that range. You have an average range of $102.48. That would be a 16.15% increase. High would be $162.75. That would be 84.46. So all the while we would be collecting that, right? 1.59% dividend yield. So low dividend yield, dividend growth 34.62%, very high dividend growth. Payout ratio extremely low, 9.6. Quarterly payer, $1.46 paid out on the year. Let's go back 2017. They were paying out 20 cents in 2017, 2018 at 21 cents, 2019 to 22 cents, 2020 24 cents, 2021 26 cents, And then a big jump up from 21 to 22, from 26 cents to 35 cents. Currently sitting at 35 cents, right? All right. So those are the ones I wanted to take a little bit of a deeper dive in. Microsoft is still on that one as well. Apple would be one in that one, that low yield, high growth. And then if we are looking at honorable mentions, right? Stanley Black & Decker, ticker SWK, United Parcel Services, ticker UPS, Medtronics, ticker MDT, Johnson & Johnson, ticker J&J, and MasterCard MA. So all of these, let's go through them one more time. Stocks to really look at for 2023. If you're looking to start a portfolio, these would be some of the stocks I would start with. Medical Properties Trust for if you're looking for, or if you're looking to add high yield, low growth, right? You're trying to add some high yielders to your portfolio to bring that yield up a little bit. Medical Properties Trust, ticker MPW. Omega Healthcare Investors, ticker OHI. Verizon, ticker VZ. Enterprise Products, ticker EPD. Another one in this would be Enbridge, ticker ENB. That would be one I would look at. If you're looking for something with a mid-yield and medium growth, Intel Corporation, ticker INTC. Ally Financial, ticker ALLY, even though that is growing pretty rapidly. Same with HP Inc., ticker HPQ. Both of these are medium yield but have higher growth. CVS Health, ticker CVS, is in that mid-yield, mid-growth. And Cisco Systems, ticker CSCO, in that mid-yield, mid-growth too, medium growth as well. If you have a long-term horizon, right? You're 20 years, 30 years away from retirement. Maybe some of these are better with low yield, high growth. Bank of America, ticker BAC. Union Pacific Corp, ticker UMP. Owens Corning, ticker OC. Microsoft Corporation, ticker MSFT. And then again, honorable mentions. Stanley Black & Decker, ticker SWK. United Parcel Services, ticker UPS. Medtronic, ticker MDT. Johnson & Johnson, ticker J&J, and MasterCard Inc., ticker MA. And since we are doing a longer video, I am going to go ahead and reveal the spreadsheet with all my, here we go, investment tracking spreadsheet with all my holdings, so you can see what my portfolio holds in it. So I have, hopefully you can see this. This is not too small for you. Here, let me blow it up a little bit. Ally, which we just looked at, that was one. I have 60 shares, right? My average share price is $25.18, right? It's growing at 36.36% growth. Payout months, January, April, July, October. Estimated annual dividend income for me with the 60 shares, $72. We'll go through these quick. Bank of America, ticker BAC. Average share price, $37.53, right? Quarterly dividend, current dividend yield. My yield on cost, 2.3. Portfolio weighting at 6.19% of my portfolio. Estimated annual dividend income, $172.85. Payout months, March, June, September, December, 13.33% dividend growth. So you can look at these and see all these. So these, Ally, Bank of America, Cisco Systems, Enbridge, Enterprise Product Partners, Huntington Bank Shares, HP Inc., Intel, Johnson & Johnson, Kraft Heinz, Leggett & Platt, LyondellBasell, Medical Properties. Ticker O is Realty Income. OC was Owens & Corning's. We just saw that. I have 6 shares. That's a relatively new position. OHI, Omega Healthcare Investors. We saw that, right? 180 shares there. That's a big portion. $484 in annual dividend income. No growth there, really. Procter & Gamble. PRU is Prudential Financial. Sylvania Stillwater, this is a mining company, right? Stanley Black & Decker, we saw that one in my honorable mentions. That's a relatively new position as well. 4 shares there. AT&T, ticker T, 210 shares. Union Pacific, 8 shares. Vale, there's another mining company. Verizon, Whirlpool. So these are all in my portfolio. These, from here down, Apple, Microsoft, Best Buy, Bristol Myers Squibb, UPS, United Parcel Services, CVS, right? We saw CVS Healthcare Systems, or CVS Health. We saw MasterCard, Medtronic, SCHD is an ETF, Schwab ETF, Pinnacle, PNW is utility that I'm watching. These are all on my watch list. From Apple to Pinnacle, these are not in my portfolio. These are just on my watch list. That's why the rest of this side is not filled out, right? The quarterly dividend is filled out, but what the yield is, what the portfolio rating, it all says 0. That's because they are not in my portfolio currently. Payout months, right? You can freeze this and kind of see how everything's being paid out. $5,428.06 in dividends. If you watch my weekly updates, you'll see this number go up. This is where I pulled that information from. I'm down. My overall portfolio is down 2.76%. I have $105,983.86 invested. My current overall portfolio is worth $103,058.62, right? But I am more focused on this. My dividend yield, my current yield is 5.267. My yield on cost is 5.122, right? And then here's my sector breakdowns, not only by sector weights, right? I usually reveal this every week on my portfolio update. Excuse me, my nose is itching. And here is how it's broken down by the dollars allocated, portfolio sector weights, communications. Of that 103,000 portfolio, $9,661 is in communications. 8,469 is in consumer discretionary. 6,638 is in consumer staples. 899. You can stop this and kind of freeze this. I show this on my monthly update, right? Overall dividend income for 2021. The portfolio was started in 2021. Here it is in 2022. About to wrap that up. So I'll do a dividend portfolio update for December. What dividends were paid out for December here, and then we'll update this for the year. You'll see that. This is my discounted free cash flow analysis, right? If I was to look at a stock more deep dive, I could estimate a value based on, free cash flow 2018 to 2021. I'll have to adjust this now that it's 2022 or 2023, right? So these are some of the other information. These are stocks that I'm looking at, estimated for, cost value or fair value, 10% discounted, 15% discounted. So I do these all. Well, I'm getting a little long-winded, but I did want to share some more information than I normally share with you. Hopefully this was informative and helped you out to understand how I value stocks. Drop a comment down below. Let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. It doesn't cost you a thing, and it helps me out. It helps with the algorithm, helps get the word out. If you like this kind of content, definitely subscribe to the channel. Join me every Sunday. I do a portfolio update. I also do stock pick of the day videos Monday through Thursday. And then I do videos like this from time to time. I'll do a stocks that I'm buying for the month as each month turns over. This was more for 2023. Those stocks that you saw, high yield, low growth, medium yield, medium growth, low yield, high growth, and the honorable mentions are all stocks in the portfolio currently or on my watch list that I will be looking to add whenever the price is right. Now, that doesn't mean they are the only ones. Those are just ones that I am kind of focusing on for 2023. As other positions or stocks present value, I will add those to the watch list or add them to the portfolio as well. I'm always looking for value, and I will present that to you whenever I see it in the Stock Pick of the Day series. So again, hit that subscribe button and join me for that. I do personally read and respond to the comments, so drop a comment down below. Let me know what you think of the video. How was your Christmas? What stocks are you looking to watch for 2023 as we flip the calendar year here? Again, I do answer and respond to the comments myself, at least on the day that I put out the video. Right now, I'm not getting enough comments to where I'm not responding beyond the day of the video, but if you've dropped a comment on a video that's, a couple weeks or a month old and I don't respond, I apologize. I do have a lot going on. This is not my day job. I do work for a living. This is just something I like to do on the weekends whenever I get home and whenever I have some spare time. It is a bit of a hobby of mine, and I invest anyway, so I'm going to try to help out those that they can. I grew up in a double-wide trailer, very poor family. My dad was a mason. My mom cleaned houses for a living, so I know how it is. I am blessed now. Both my wife and I have a very nice living, very nice house. We both make very significant living, much more than my parents and her parents. So if I can help somebody out with the information that I'm sharing, that is the objective here. I don't get paid for this. I don't have any sponsors. and I don't have a paid Patreon or anything like that. So everything that I do on this channel is free to see. If you appreciate that, like I said, hitting that thumbs up, ringing the notification bell down below, and most importantly, hitting that subscribe button does help me out a lot. And now I'm rambling, so I will let you go on this day after Christmas. Again, hope you had a wonderful holiday season and have a happy, happy New Year. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.